And in this video, I'll be discussing my Substack post that got sent out on Tuesday as the beginning of the week gets rolling. And we always have to have a look back period where we investigate the state of the market, where we are and how we're going to make money off of it. If you're not already subscribed, go to everbullish.substack.com. Welcome to the office. Let's get going. So I sent this out on Tuesday. I wanted to make sure that everybody knew or remembered that the best day to trade, in my opinion, especially for a short-term swing trading strategy, is I believe in investing on Wednesday. You're going to get the best price. Trading on Wednesday, your buy-ins on Wednesday. Now, I'll send out trades and posts all throughout the week. It's not the only time, but back early in my career, it was Tuesday is Trade Tuesday, Institutional Tuesday. There's a lot of cute names to it, and people thought that potentially that investing on Tuesdays was the best day of the week to go. I don't believe that. I think it's on Wednesdays, and here at EverBullish, I actually calculate our weekly returns based on Wednesday to Wednesday. That's a pro tip for you guys. If you want to think about it like this, Wednesday's the best, Thursday is the second best, Tuesday is almost as good, and then Fridays and Mondays are meaningless. They're meaningless Mondays. So that's just a pro tip I wanted to put here for you guys. I think it's incredible how much little things like that over a 52-week year really add up and matter. All right, so here's the market map. Funny enough, this is the exact opposite of last week's market update, which is we see nothing but massive red and downs in the big names and in the hyperscalers within the stock market that show up on the dashboard or the homepage whenever you take a look at the market for the day or for the morning. This one was done at about 1:23, 1:30 Central Time, and I wanted to show that the reason I maintained a bullish approach and a bullish expectation for this week, which is now coming to fruition, is that although we had poor performance among the big names and the institutional names, we had a massive flip on the sector volume aspect. So as far as volume, 72% of buyers essentially are out there buying, whereas 27% are on the sell side. This is, again, the exact opposite of last week. And if y'all remember, I attributed to this and kind of a lesson involved in it, that this is, in my opinion, a big harbinger for the fact that that we have insider trading. I guess there's no other way to say it. Big names making big moves. And typically not necessarily in the stocks that are most popular now. They're buying the dip, right? So part of the hypothesis is that on a pretty much flat day across the board, the sector volume buy-sell ratio basically is going to tell us a lot more about what's to come in the future days. Again, notice the volume on the buy side is so heavy. This is the exact opposite of last week, which it flipped going forward the next few days after posting last week's market review. All right, here's the other market map that I like to take a look at. Everyone, I can show you and tell you exactly how to do this, or you'll learn from following these videos. But we see the NVIDIAs and the Apples, the Broadcoms doing just fine, basically trading flat, and then AMD, Intel, Micron, which we're heavily invested in, being quite down, like rather big down days. And what's the reason for that? It's the fact that there's been negative news and really a rout when it comes to semiconductors. Do I believe that route is worth believing in or worth following the hype on? I don't. Not at all. I think that these stocks are going to turn around. And again, I made this Monday, but the main point is that checking out these market maps, you get very intuitively invested and understanding and knowledgeable about the different subsectors, particularly like in this one is tech, right? Going down, we can see mostly green across the board in the communication services space, system software space. Same going on for the banks. Like this is actually a good sign for a more healthy market or economy for a few days when we see Berkshire, BlackRock, a lot of the banks, as well as even some of the FANGs, right? So we have Netflix, Verizon, one of my favorite dividend stocks ever. So this is not as bad, basically, as is what it looks like by just taking out this original dashboard that is the first thing to look at and the first thing that we look up here at EverBullish. So point being, flat day, flat market makes a lot of sense because it was a Monday or Tuesday when we put this thing out. And then looking further down, we're seeing healthcare, biotech, some of the others. Only thing that kind of got me here was that we had oil and gas a little bit flatter than I would have expected, considering the price of oil is bouncing like crazy and the escalation in the war. Remember, guys, it's the hypothesis that I have that war is actually a big catalyst for the market. We're in that enthusiastic and effervescent phase of people just buying and not being as weary of stock trading while our country is going pretty heavy and full out when it comes to bombing Iran and some other countries. So in the past, that's usually the exact opposite, right? Typically, we want all the geopolitical stability that there is. I think that right now, kind of with the personality of the market and maybe the jadedness that we've had for so long, that the market will be dropping at some point based on all these geopolitical moves, and it hasn't. That's what keeps us continuing to go and continuing to buy the big stocks and the big movers, the high volatility stocks, and using leverage on them. I don't want to give it all away. And I need you to have a reason to obviously become a subscriber at EverBullish, but that's kind of where we are. So again, the main hypothesis is that the economic markets are all very bad, but they have been for the last 8 years or so. And in spite of that, the market is way more bullish and way more opportunistic than it ever would be, like by the book, the way they teach the market and the way advisors, unfortunately, right now are definitely selling the market to you. The stock market loves war and conflict. We've been off by extreme orders of magnitude with assuming and believing the numbers of insider trading really for the last 20 years, obviously, because it is so notoriously happening right now, and it's happening in the open. And that is what's also causing a lot of the volatility in the smaller names and in the bigger names. So right now, market bullish, numbers aren't very good. Numbers don't seem to matter that much. And war and insider trading is what's really hopping and popping the market back up and down, which is beautiful because that's when we make money. Some of the headlines here for the beginning of this week is that obviously investor caution growing as semiconductor market sells off. It's 2 days later now from printing this, and we did have trades. We do have trades on with some leverage in semiconductors, and now they have rallied over 30% since putting this out. So I'm pretty glad about that. Kind of called it. Really not a lot else in here other than CPI numbers. Inflation came out a lot cooler than we thought. And just today, the Fed has decided that they will not be raising rates, and we're going to stay in that 3.5 to 3.75 range, which means steady. We're not trying to cool down the market. We're also not trying to stimulate it as much as we were with Powell, who is doing the same thing, but getting a lot of guff for it. Again, chip sell-offs deepen. See how this is all really monopolizing the news is these directions, particularly in that sub-asset class right now, which is semiconductors. Other times it's consumer staples. Other times it's medicine. Other times, healthcare, biotech. And right now it's just dominating the news. Kind of tells you a reason that maybe you would want to be in it, depending upon whether you're a contrarian investor, which we have to be right now. Gold, commodities. So commodities, gold, oil, crypto, have all been kind of not really moving late, but crude oil, this is the one that I'm betting on big with my customers and with my personal money. So with what's going on with the war in Iran, and anytime there's something going on in the Middle East, we typically want to pay close attention to oil prices and futures. So this is the price of a barrel of oil in expectation 1 month away. And right now it's at 79. It will be going up. I'm kind of baffled by the fact that it hasn't. We cashed a 25-ish% trade on an ETF called OILU, and we got out of that using one of our limits, and now it's time to get back in. And believe it or not, one of the trades that's coming out for my paid subs is going to involve a similar ETF. You got to log in to know what it is. Gold has been flat. We've had that 1 year run starting about a year and a half ago of gold going straight through the roof. I remember when it was at 1,600 when I began my career. I remember seeing it fall to 1,200 or 1,300, and then it's had this nasty run, great run, nasty in a positive way, all the way up to where it is. I think that we're going to stay away from the gold trades until something is going to provoke it, or until we see a massive drop. I think a bigger drop is coming before a big run up is going to happen. This is a sector performance. Consumer staples, normally means when consumer staples is at the top that we're entering recessionary vibes, right? But we're only looking at a week. When we look more at a month, we have energies, which is recessionary, financials, recessionary, IT and consumer discretion, which are the ones that do best in up markets. Being at the very bottom there, I'm betting on a flip. I don't want to give the whole script away, but I'm betting on a capitulation. This has been very common throughout, essentially for the last year or so. The market's playing ping pong and the sectors are bouncing all over the place. That's kind of how we know where we are. So knowing this information and based on all of these trading insights, stick around. A new video will be coming out for the paid subscribers, and then it'll be posted on YouTube a bit later so that you guys can actually track my record and see the level of success or not, and decide whether to follow or fade me. I appreciate you guys, bulls. Understand that I'm out here doing videos as well. I want to make sure to attract a new audience here on YouTube. And the point of this all is to make you guys richer. That's the reason I do it. 20 bucks a month, 200 bucks a year, updates like this. And then the real gravy is going to be the trades coming tomorrow.